Welcome to the Coin Bureau Weekly Crypto Review. Here are this week's top headlines in the crypto news. Etoro to delist Cardano. The unprecedented move by a large trading platform leaves ADA holders on edge. Is it just FUD or something more? Immersed in the Metaverse. The company behind Pokemon Go gets cash to create a crypto world, while Grayscale makes the case for the Metaverse. What comes next for this crypto niche? Ethereum improvements expected. As the total value locked on Ethereum's Layer 2s hits new all-time highs, Vitalik Buterin proposes a solution to Ethereum's gas fees. Will it work? El Salvador wants more. President Najib Bukele buys the dip after announcing plans to build a Bitcoin city. When can we move there? India's crypto bill could kill. Crypto prices tank on Indian exchanges as politicians move closer to a blanket ban. What is causing their crypto crackdown? Jerome keeps his home. The reappointment of everyone's favorite money printer operator is all but certain. So why did the markets tank when this was announced? And a closer look at what's going on in the markets with this week's crypto market forecast. All this and more in just a moment. Good morning, afternoon, or evening. Thank you for tuning in. My name is Guy, and what you're about to see is educational content, not financial advice. You can find any topics you're looking for using the timestamps in the video timeline. And now for today's top stories. Etoro has announced that it will be delisting Cardano's ADA coin for US users starting December the 26th, with a full removal of ADA from its platform by the end of the first quarter next year. This is something I talked about briefly in a Telegram post, but we'll further break it down now. So, Etoro cited the quote, evolving regulatory environment as its reason, but did not specify which US regulations it believes Cardano is or could be violating. Given that Etoro's ADA delisting only applies to US users, many have speculated that Etoro might think the SEC classifies ADA as a security, akin to a stock in a company. The thing is that ADA does not meet the criteria defined in the Howey test, which is used by the SEC to determine whether an asset is a security or not. If you've watched any of my videos about the SEC's lawsuit against Ripple, you'll know that the SEC goes after cryptocurrencies when you can identify a third party which is driving the expectation of profit. Now, in the case of Cardano, there is no third party you can definitively point to. Cardano is, quote, sufficiently decentralized in that sense. Cardano is decentralized at the technical level too. Its blockchain is operated by thousands of independently run stake pools. The only other metric that Etoro could take issue with is the distribution of ADA, and from the articles I've seen floating around of late, it seems that ADA holders suspect this is the culprit. If you've watched my video about Cardano versus Ethereum, you'll know that Charles Hoskinson seems to hold between 1 and 2 billion ADA. This is based on his answers to questions about his net worth in his AMAs. Now, it's possible that Etoro believes US regulators could see this as a problem, but that wouldn't make sense because the largest Dogecoin wallet holds more than 23% of all Doge, yet Doge is listed on Etoro without issue. In my opinion, the only other explanation is that this was simply a bad decision, which was made based on outdated information from back when Cardano's constituents played a role at the protocol level. The good news is that there wasn't much ADA trading happening on Etoro relative to crypto exchanges, something which Cardano founder Charles Hoskinson pointed out in a follow-up video. ADA also began trading on Bitstamp the day after Etoro announced the delisting, and this should more than make up for the liquidity lost from Etoro. Meanwhile, in the Metaverse, the company behind Pokemon Go, Niantic, raised a solid $300 million to build augmented reality infrastructure for virtual worlds. In contrast with virtual reality-based metaverses such as Facebook's Meta, Niantic wants the metaverse to be an addition to the real world rather than a replacement for it. Now, it's not entirely clear what Niantic is planning, but its blog post suggests that it will be a byproduct of its Lightship platform, which is onboarding AR-oriented metaverse developers. Niantic is going to have a lot of competition because it looks like Grayscale is also betting big on the metaverse. Its recent report notes that metaverse worlds have seen a 10x increase in users over the last year and projects that the annual revenue from virtual games will increase 5-fold in the years to come. This target will be reached quite easily, given how eager legacy companies are to work with metaverse projects in the crypto space. Look no further than Adidas and the Sandbox for evidence of that. The problem is that the metaverse niche is quite new, and there's no way of knowing for sure which projects will survive the bear market. This is especially true for play-to-earn oriented metaverse projects like Axie Infinity, which may struggle to attract and keep users when the prices crash. You can learn more about Axie Infinity and its play-to-earn economics by watching my recent video about the project, and that is in the top right. Another issue that metaverse projects will face in the future is the scalability of the smart contract blockchains they're built on, both in terms of throughput and affordable transaction fees. Ethereum is of course infamous for its high transaction fees, which is why so many Ethereum projects have opted to switch to Layer 2s, which leverage Ethereum for security, including Axie Infinity. According to L2Beat, the total value locked on Ethereum Layer 2s recently exceeded $7 billion, and you can see that this TVL is growing at a close to exponential rate. This growth seems to have only just begun too, because Ethereum itself currently has around $170 billion in total value locked, meaning there's lots of wiggle room for Layer 2s. The funny thing is that even these Layer 2s are starting to become expensive, especially rollups. This is why Vitalik Buterin proposed EIP 4488 over the weekend, which could make gas fees 5 times cheaper. Without getting too technical, EIP 4488 basically involves increasing Ethereum's block size. This makes it possible to fit more transactions into each block, which should theoretically reduce transaction costs. If you watched my video about the fastest cryptocurrencies, you'll know that this increase in block size means the size of the blockchain's transaction history grows faster. This makes it harder for nodes to store the full transaction history, which could compromise decentralization. Hence why Bitcoin creator Satoshi Nakamoto designed Bitcoin to have a small block size. Now, if I understand correctly, someone commenting on Vitalik's proposals said that the Ethereum blockchain could grow at a rate of up to 3 terabytes per year if EIP 4488 goes through. To put things into context, the Ethereum blockchain is currently 1 terabyte large, and the Bitcoin blockchain is just 380 gigabytes large. This means that Ethereum might have to come up with a way to store its on-chain data in a decentralized manner, the same way Solana did with Arweave. More about that in the description. Anyhow, while EIP 4488 could potentially make a dent in Ethereum's decentralization, cutting gas fees 5-fold could be what ETH needs to finally flip BTC. Speaking of Bitcoin, Salvadoran President Najib Bukele bought another 100 BTC for the country during last week's dip. El Salvador has bought the dip 3 times so far, the first time coming during the crash that happened after Bitcoin became legal tender in September, and the second time coming around the crash at the end of October. This brings El Salvador's total BTC holdings to 1,220, currently worth around $70 million. The Salvadoran government has also been using its Bitcoin gains to build infrastructure, such as schools and animal hospitals. El Salvador's latest Bitcoin venture is Bitcoin City, complete with geothermal energy and 0 taxes for residents, besides a small value-added tax on everyday purchases. Construction of the city is projected to cost around $16 billion, and El Salvador plans to raise $1 billion of this using Bitcoin bonds. These Bitcoin bonds will be issued by Bitfinex's securities division and be bought and sold on Liquid Network, a sidechain for Bitcoin created by Blockstream. Blockstream's chief security officer, Sansom Mo, noted that there is no shortage of BTC whales who are willing to put up the funds required to make El Salvador's Bitcoin City a reality. Now, this may very well be the case, but the absence of any concrete dates has raised some skepticism about whether Bitcoin City will ever come to pass. It also doesn't help that Bitfinex has had its fair share of run-ins with regulators and has also been a somewhat controversial player in the crypto space. This has to do with Bitfinex's close relationship with Tether, which issues the USDT stablecoin. Now, if you happen to be curious about who's been buying all the USDT, you can find out by clicking that link up there in the top right. Shady crypto companies are a part of why regulators around the world have been closing in on crypto, and the latest country to raise its fist at the sky is India. Last week, it was reported that Indian politicians would be discussing a bill which would ban, quote, all private cryptocurrencies. The bill also paves the way for the creation of a digital rupee, India's own central bank digital currency. Within hours, the prices of most major cryptocurrencies began to crash on Indian crypto exchanges such as WazirX, with BTC falling by 15%. India's anti-crypto bill has been floating around since February this year, but it looks like politicians never took the time to actually sit down and vote on it. If you're wondering when they are going to vote on it, the answer appears to be today, and it's possible that a vote has already happened by the time this video hits the tube. Before you panic, consider the following. For starters, the Indian government seems to be aware of the importance of the crypto sector and mentioned when the bill was initially introduced that it would coordinate with crypto companies to create a realistic timeline for a crackdown. Basically, it would do something like what we have now with the infrastructure bill in the United States, where all the anti-crypto provisions don't go into force until 2024. If you watched my first video about Polygon, when it was still known as Matic Network, you'll remember that co-founder Sandeep Nailwal mentioned India can't ban crypto outright because it's unconstitutional. Now, I know that kind of reasoning doesn't go very far these days, but it's a big part of why India's Supreme Court ended the Indian central bank's 2-year-long crypto ban in March of last year. That said, it's clear that the main motivating factor here is the threat that cryptocurrencies pose to India's upcoming CBDC. With some luck, Indian politicians will settle on just banning crypto payments the same way Turkey did earlier this year. With no luck, Indian politicians will follow China's lead by banning cryptocurrencies completely, something which is again unlikely but very possible. Obviously, this would have a severe impact on the crypto market. Another thing that could hit the crypto market is the Federal Reserve, and this is why the reappointment of Jerome Powell is so important. To quickly recap for around the millionth time, the Federal Reserve has been buying $120 billion of government bonds every month. This has kept interest rates low, which has made it possible for individuals and institutions to borrow way beyond their means. The Federal Reserve announced earlier this month that it would begin reducing its bond purchases, aka tapering, this very month, and would continue until sometime next summer. This means interest rates will rise, and over-leveraged individuals and institutions will have to start selling assets to cover their unaffordable debts, which will hit equity markets and, by extension, crypto. If the Federal Reserve tapers slowly, the markets should be okay. However, Federal Reserve officials have been hinting at the possibility that they will accelerate this taper because of the out-of-control inflation we're currently seeing. The condition is they need to see some strong employment numbers. Now, as it so happens, October's employment figures looked pretty good, at least on paper. Remember that unemployment only counts people who are actively looking for work, not people who've given up. Anyways, in what can only be described as a backwards economy, high employment means that the Federal Reserve will taper faster in an attempt to curb inflation, thereby increasing interest rates and crashing the stock market. Now, compared with other prospective Federal Reserve chairs, Jerome is perceived to be much more hawkish, meaning he's likely to push for a more aggressive tapering schedule based on employment. This is why both the crypto market and the stock market crashed last week when President Biden announced he'd picked Jerome as the next Fed chair. Now, it's safe to say that interesting things have been going on at the Federal Reserve lately, and you can learn more about those by clicking that link in the top right. Now, there are a few factors besides the Federal Reserve which dragged down the crypto market last week. Another contributor was Bitcoin option expiries. Put simply, big investors make bets that BTC will be a certain price by a certain date, and as that date approaches, there is a lot of activity in the spot markets. This is because market makers are trying to adjust their positions and hedges in the options markets. There's also the possibility that whales in the spot market could be artificially holding the price down in order to make sure their options expire in the money. Larger options expiries tend to happen at the end of each month, hence why BTC tends to perform poorly in the second half of every month, along with the rest of the crypto market. More recently, we got word of a new strain of a disease which shall not be named, and this has both the stock market and the crypto market on edge. After all, uncertainty is what the markets hate most. The crazy thing is that this new strain could end up being very good for crypto and especially BTC, because it will force central banks such as the Federal Reserve to reverse course and buy buckets of bonds. The unfortunate thing is that this will only make inflation worse, which is why gold rallied on the news of the new variant. BTC is an inflation hedge like gold, so it's only a matter of time before it follows suit. Turning to the charts, we can see the first signs of this, with BTC seeing a bounce off the strong zone of support around 53k, and indicators suggesting we are at or near the bottom of this short-term downtrend. Not to sound dramatic, but the next week or two are going to be very important for crypto as BTC is forming a bull flag on the monthly. If it can get back above 61k in December, we should see another all-time high early next year. This week's winners are Gala, Basic Attention Token, The Sandbox, Zcash, and Crypto.com coin. Gala was a winner last week, and the reason it's rallying is the same this time around. It's part of the Metaverse niche, it listed on Coinbase not long ago, and it has a smaller market cap compared with other Metaverse cryptos, or at least it did. In terms of technicals, you can clearly see that Gala is finally starting to pull back a bit, and we could fall as low as the 60-cent range before moving higher. Basic Attention Token is an unexpected weekly winner because BAT has historically performed quite poorly compared with other cryptocurrencies. This is because BAT lacks a utility to create demand, despite belonging to a privacy-preserving browser with tens of millions of monthly users. It's not entirely clear why BAT blew up last week, but I suspect it has something to do with Brave's partnership with Solana, which will see BAT brought into Solana's dApps. Although BAT's price pump appears to be pretty unsustainable, the technicals suggest that it could potentially move higher in the next week or two, assuming we see a bull flag form from the latest candle. Next up is the Sandbox, and if you picked up on the comment I made earlier about Adidas teasing a Sandbox partnership on Twitter, you'll know that's part of what has taken Sand to another land. The Sandbox is also launching its game in a limited fashion today, but it looks like it might have been a sell the news event as far as the Sand token goes. Even so, Sand is still looking pretty strong, and it's unlikely it will fall below $5 anytime soon. Zcash's ZEC coin, on the other hand, is looking a little dismal, with a pretty intense red candle reversal from the pump that put it on the weekly winners list. The closest thing to a cause that I was able to find for that green candle was a short piece published by Grayscale about Zcash and the importance of privacy in cryptocurrency. This cause doesn't quite fit the profile, however, because this post happened after ZEC had already pumped. In any case, it looks like ZEC will drop down to the 230 range in the coming days, and hopefully not much further than that. And finally, we have Crypto.com's CRO, which was on last week's winners list as well. I must say that I'm very impressed with CRO's price performance, and I reckon you can chalk it up to the ongoing hype around Crypto.com's $700 million naming deal for the Staples Center in Los Angeles. It's also worth keeping in mind that Crypto.com is in the middle of a massive marketing campaign, so we'll probably see more crazy news like that coming out soon enough. Right now, the charts are telling me that CRO is in a tricky spot. It looks like a lot of people FOMO'd in above the 80-cent mark and are selling when it approaches that mark. If CRO can break above 82 cents, it should have a clear path to $1. If you want to learn more about Crypto.com and CRO, be sure to watch my recent video about that. You can find it in the usual spot, top right. And that's all for today's Coin Bureau Weekly Crypto Review. If you enjoyed it, you know what to do. Hit that like button, subscribe button, and bell icon too. If you want more of me, head on over to Twitter, TikTok, and Instagram to get a sneak peek behind the scenes. If you join my Telegram channel, you'll get the daily crypto updates you crave, and signing up for my weekly newsletter is a great way to get the tools, tips, and tricks you need to get paid. And of course, you can support the channel by heading over to the Coin Bureau merch store and picking up a shirt or hoodie or both. Links to all these resources are in the description, folks. Thank you so much for watching, and I'll see you all in next week's episode.